Often real estate investors get denied for loans, and it's not because their deal was bad. It's because they didn't understand what hard money lenders are actually looking for. I've been doing this for over 17 years, and I've seen great deals get rejected by hard money lenders because they didn't have the right information readily available. And I've seen mediocre investors get approved fast because they knew exactly what information to provide. In this video, I'm pulling back the curtain and I'm going to show you exactly what loan underwriters check before approving your deal. And more importantly, how to make sure your loan gets approved quickly. I'm Corey Dutton, owner of High West Lending. We're a private money lender that's funded millions, and I mean millions of dollars in hard money loans for real estate investors across Utah, Colorado, Idaho, Montana, Wyoming, Arizona, and the surrounding western states. Whether you're flipping houses, buying a rental to rehab and refinance like a BRRRR property, or buying small multifamily properties, understanding the underwriting process for hard money lenders is the difference between closing fast and watching your deal fall apart. So what are hard money lenders actually looking at when your loan lands on their desk or when it hits their inbox? Here's what matters most. First, the property value. A hard money lender is looking at two numbers, the as-is value and the after repair value, or ARV. The ARV needs to be realistic and backed by solid comps. Say you buy a house that's worth $400K fixed up, but similar renovated homes in that neighborhood are selling for $350K, that might not get approved. Second, your exit strategy, or your plan for paying the loan back. How are you getting out of this loan? Are you flipping? Are you refinancing? Selling? We need to see a clear plan. If your exit is shaky, then your odds of approval drop fast. Third, liquidity and skin in the game. Cash means liquidity. Can you prove you have cash or cash reserves? Hard money lenders, we want to see that you've got a cushion for surprises. If you're tapped out on reserves before you even buy the property, that's a problem. Fourth, your experience and your track record. Now, you don't need to have done 50 real estate deals to get approved. We do lend to beginners, but we want to see past experience or skills that would be key in this project's success. Build a resume of skills or experience that would lend most to the success of your project. And if you have experience, provide a paragraph or two explaining the details of the real estate investment you did make, and at least one photo of the property. And here's the big difference from banks. We don't care much about your W-2 income. Banks want to see tax returns and pay stubs. We want to see that the deal makes sense, and that's it. The deal is king. Your personal income, not nearly as important to a hard money lender. All right, now let's talk about why investment property loans get denied, even when investors think they have a solid real estate deal in their hands. All right, number one, unrealistic after repair value numbers. I can't tell you how many times someone comes in saying, this house is going to be worth $500,000 when I'm done. But the comps, they don't support it. Maybe they're using bad data. Maybe they haven't driven the comps and they are not sure if these are actually comps. Either way, inflated values kill loan approvals. Number two, title issues or hidden liens on the property. You'd be surprised how often this comes up. Someone finds a great deal, but there's a lien on the property or a title problem that no one caught. We can't fund a loan if the title isn't clear, so always see if you can run a preliminary title report early if you have someone that can help you with that. Number three, no construction budget or weak contractor estimates. If you're doing a rehab or rehab to rent, a fix and flip, we need to see a real budget, not just I think it'll cost $40,000. We want estimates from contractors, so if you can't verify your numbers, it's going to be hard to get your loan approved. Number four, poor communication. I see this all the time. And it's pretty simple. If you're slow to respond or go silent for days on a lender, that tells the lender that you're not serious. If someone's voicemail is not set up yet or is always full and I can't leave a message, that is usually a sign to a hard money lender like me that this person is probably not a good communicator and maybe not someone we want to do a loan with. Number 5, out-of-state rehab management and no experience. If you're managing an extensive rehab project out of state, if you don't have experience in that market and have established contractors there, this is a no-go for most hard money lenders. I'm sorry, it just is. Extensive rehab projects are a challenge anyway, but if you're not managing the project in the state, there's a 90% chance your contractors will take advantage of you. So how do you make sure your loan gets approved quickly? That's the key, right? Closing on these deals quickly. So here's what the pros do. 1, they prepare their loan submission like pros. That means detailed property descriptions, photos of the property, recent comparable sales, a rehab budget, and a solid plan for how you're going to pay the loan back. The cleaner your loan package, the faster a hard money lender can move and close your deal. Number 2, show your track record. Even if you've only done one deal, document it. Show the lender before and after photos, share your purchase price, your rehab cost, your sales price. Small wins still count as experience. Or if you're a beginner, showcase the strength of your team or your background skills that would convince a lender you can execute on this project and make it a success. Number 3, prove you have funds. Bring bank statements, showing some cash reserves. Show proof of funds for your down payment. If you're using a partner's money, have them provide proof. Cash builds confidence with your lenders and helps them make fast decisions on your deals. Number 4, be transparent and responsive. Answer questions quickly. Provide documents the same day if possible. If something's wrong with the property, tell us up front. Hard money lenders appreciate honesty, and it speeds up the process and builds trust for future deals. Whether or not we're going to close this deal with you or not, we're going to trust you. So bottom line, the easier you make it for the lender to review and approve your hard money loan request, the faster you're going to get the money. Here's the big takeaway. Underwriting, it's not about you. It's not about your credit. It's about the deal. Banks, they underwrite the borrower for a loan approval, credit, income. Private money lenders, we underwrite the property and the plan for loan approval. If you can show a solid ARV, a clear exit, and prove you're prepared, you will get approved. If you are working on a fix and flip, a BRRRR property, or a rental property in Utah, Colorado, Idaho, or Montana, and you want fast approval from a hard money lender who actually understands investor deals, visit highwestlending.com to get pre-qualified today. I'm Dutton. Thanks for watching, and I'll see you in the next one.